If you own a cabin in Gatlinburg or Pigeon Forge and you've been watching your occupancy numbers quietly drop over the last 18 months, this video is for you. Because what's happening in the Smoky short-term rental market right now isn't a blip. It isn't a slow season and isn't going to fix itself when summer hits. I'm going to show you what's actually going on and why the numbers are telling you a story most short-term rental property managers don't want you to hear. What significant numbers of smart investors are quietly doing before the crowd figures it out. My name is Darius. I'm a Knoxville native, 20-year Air Force veteran, and the owner of Real Property Management Marble City here in East Tennessee. I don't manage vacations, I manage investments. And right now there's a difference between those two things, and that's worth understanding. Let me give you the data first, because that's where this conversation has to start. Smokies cabins that were running 80 to 90% occupancy rate just a few years ago are the ones that look like automatic income machines. They're now dropping into the low 50s. That means for every 10 nights your property is available, it's sitting empty for nearly half of them. And it's still costing you the same in mortgage, utilities, HOA fees, maintenance, and management costs every single month. Why is this happening? Supply finally caught up with the hype. The Smoky short-term rental market is now sitting at more than 5% oversupply relevant to actual demand. That's not a rounding error. That's actual market problem that doesn't resolve quickly. When supply outpaces demand by that margin, the only way most platforms respond is to race to the bottom on pricing. Drop your nightly rate, run promotions, compete on discounts, and the management company, the one taking 25 to 35% of your gross off top of that, keeps taking their cut regardless of what you net. You take the risk, they take the percentage. That's the deal you sign. And for a while, when occupancy was in the 80s, it worked. Now it doesn't. Here's something I want you to understand about how large short-term rental management companies operate in the Smokies, because it matters for the decision you're about to make. When you have a company managing hundreds, sometimes thousands of cabins in a single market, your property is unit 247 in a spreadsheet. The goal isn't to maximize your specific return. The goal is to maintain their platform volume, keep their reviews above a threshold, and generate enough bookings across that portfolio to justify their fees. When maintenance is needed on your property, they're not calling 3 vetted vendors and getting competitive quotes. They're calling whoever's already in their network, and whatever rate that vendor charges is billing back to you, sometimes with a markup. Vendor transparency is rarely part of that conversation. When occupancy drops across the market, they're not sitting down with you and rethinking your property's position. They're dropping prices algorithmically to chase bookings. Your asset becomes a commodity in a race your manager isn't running at a risk of losing. You are. I'm not saying every short-term rental manager operates this way. I'm saying that when it comes to a company scales to that size, these things become nearly inevitable. Not because they are bad people, but because the model doesn't reward the kind of attention your investment actually needs. The investors I'm watching make the pivot right now and have figured this out. And they're not panicking. They're being strategic. Let me be specific about what changes when you move from a short-term rental model to a well-managed long-term rental in the Knoxville market. Because this isn't just about trading one headache for a quieter one, this is about building something stable. In the Knoxville long-term rental market, you're looking at a tenant who signs a lease typically for 12 months, often renewable, and who becomes responsible for the property on a consistent, documented basis. You know exactly what's coming in each month, you know exactly what your management costs are, and you're not paying platform fees and cleaning crews every stay, dynamic pricing consultants, or the premium utilities that come along with vacation rentals. The math changes significantly when you model it out, and I'll come back to that in just a moment. On the management side, here's what I do differently from the model that I just described. Every vendor I work with comes vetted through a national network, and Real Property Management has built across 500 offices. These aren't just random contractors found on a platform. These are pre-screened professionals with documented track records, and because of their relationship volume I bring them, they give me competitive pricing from the first call. No markups, no surprise invoices you see on every quote, every invoice, every decision that touches your property. I set a maintenance threshold with every investor before a tenant ever moves in. You tell me how much I can authorize without calling you. $500, $1,000, $3,000. Whatever your comfort level is, I operate within the threshold precisely, and I back brief you on anything outside of it before I act. I don't grow by taking on more properties than I can actually manage. Those companies in the Smokies that lost the edge they had in 2020 didn't lose because the market changed. They lost because they scaled past the point where they could keep up to their own standard. I'm not interested in doing that. My reputation is built on every property I manage, not just the portfolio total. This is where I want to get practical for a moment, because I know some of you are watching this with a specific property in mind and a specific mortgage payment that needs to be covered. Real Property Management gives every investor I work with access to a proprietary tool called the Wealth Optimizer. You can put your property in, purchase price, loan terms, projected rent, estimated expenses, and with that model, the long-term return for you, hold and rent or fix and flip, side-by-side comparisons. It factors in management fees, maintenance reserves, capital gains implication, and builds reports that you can actually use. This isn't a pitch. It's a tool designed to give you a realistic picture so that you can make a decision based on data, not hope. A lot of Smokies investors who've come to me recently are surprised by what the long-term rental numbers look like in Knoxville. Because they've been so focused on the gross revenue ceiling that they've hit in the short-term rental market, they never ran the net income comparison side to side. Stable, predictable cash flow at 95% occupancy, which is entirely achievable in a well-managed Knoxville long-term rental market, often outperforms Smokies cabins running at 55% occupancy rate at a higher nightly rate once you strip out the platform fees, the seasonal maintenance cycles, the cleaning costs, and then the management percentage. Not always, but often enough, that's it worth running the model before you even make the decision. I want to be direct about something, because it's part of how I operate. This video isn't a pitch for everyone with a Smokies cabin. If you bought a property specifically because you love the area, you use it yourself regularly, and the rental income is secondary to what your personal enjoyment, then the long-term rental pivot probably doesn't make sense for you. The Smokies model, even in a compressed market, can still work for you in that situation. I tell you to ride it out, optimize where you can. But if you bought that cabin as a pure investment vehicle, and if the goal was to get a return on your capital and the ability to eventually sell at a gain, and you're watching occupancy compress while expenses stay flat, then it's worth an honest conversation about the next 3 to 5 years look like and whether there's a better use for that asset. Some of those investors are already selling Smokies properties and repositioning into the Knoxville and Knox County market, where population growth is creating consistent long-term rental demand, where the workforce is stable, and where the tenant pool is drawn from a real local economy rather than a tourism calendar. I'm not telling you what to do. That's not my job. My job is to give you the information and the tools to make a good decision, and then manage the asset correctly if you decide to move forward with us. The Smoky short-term rental market built a lot of wealth for investors who got in early and got out before the oversupply hit. That window is narrower now. And the investors who are going to build wealth in East Tennessee over the next 5 years are the ones making positioning decisions based on where the market is heading, not where it was in 2021. Knoxville's long-term rental market is stable. Demand is structural, not seasonal, and the right property manager makes the difference, because the management gap in this market is real. And those investors who close the gap with the right operator are the ones who sleep at night. I put together a 2026 East Tennessee Investor Transition Guide specifically for investors thinking through this decision. It covers the current long-term rental rent ranges by county, what a realistic long-term rental model, return model looks like compared to a compressed short-term rental performance, and what the transition process actually involved. Step by step, no fluff, just the information you need to run the analysis. The link to download is below. Take a look and run your numbers, and if you have any questions about a specific property, reach out. I'll give you an honest answer, even if the answer is to stay the course. That's how I work.